The cheapest growth stock in the stock market. This is a stock that I own in my portfolio. It has over 5x on the upside over the next 4 to 5 years. I'm going to talk about it, show you the numbers, and explain the company to you guys here in the video. So I really hope you enjoy it as always. And this stock is a really hated one, and it's Hims and Hers Health. I've owned Hims from $7 per share. I have averaged up multiple times on the company, and I've been talking about it on YouTube from around $10 per share. And I always get a lot of dislikes when I talk about this one because I really believe it's a misunderstood opportunity in general, especially right now as the company is going through a transition period, which is why I think it's presenting an amazing opportunity. And 2026, 2027, Hims and Hers Health will be a completely different company. Now, Hims is not just a weight loss company. They're expanding in sexual health, dermatology, skincare, hair loss. This is huge, not just in the United States, all over the world. Mental health, hormone health, longevity. The Hers business for women is almost $1 billion business, which is almost 50% of their total revenue, and most of it has nothing to do with weight loss. So the company is slowly diversifying away from weight loss into different areas, and they just keep on expanding. So if I'm investing in Hims, I'm disrupting the $1 trillion healthcare industry with the best company and the leader in the space, and they're expanding in Europe and also in Canada. Now, the last quarter was a bad quarter for Hims, and many people told me the story of Hims was over because the company has declined quarter on quarter for the first time. But this quarter, the company has proven everyone wrong, and they re-accelerated in revenue growth, and they put up a record quarter in revenue. It was the same thing with gross margins. It has also reversed, and it started to increase again. As the company's subscribers, they grew 21%, re-acceleration, and monthly online revenue per subscriber has also grown 19% year on year. Now, the reason why the company has declined quarter on quarter, and the reason why I say this is a transition period, is because the company was mass selling GLP-1s as they were on the shortage list. Then they were no longer on the shortage list, so the company is going through a transition period where they're not selling as much as they did. So of course they're going to temporarily decline in growth and decline in revenues. But then 2026 comes in, the company is not relying as much on weight loss and expanding into other areas, and then the market should give it a much higher multiple. So this is why I'm seeing an amazing opportunity over here. But the best part about the report is that the company has restarted discussions with NVO. And that was the main counter argument about investing in Hims, is that what if NVO actually sues Hims? But now they're in discussion to bring up the NVO's oral Wegovy, which is going to come in December, I believe, of 2025 on the Hims and Hers platform. But discussions are still ongoing. There's no definitive agreement yet, but they have some discussions, and this is really good. Now, Hims is not going to make a lot of money from selling the oral GLP-1 of NVO on their website. The gross margins are very thin. But what that's going to do is going to reduce the likelihood of NVO potentially suing Hims, which is going to give Hims a massive multiple expansion. This is the main risk with the company. But I personally believe, and I told you guys, if NVO wanted to sue Hims, it would have already done so. NVO has sued, I believe, 120 online, or we could say GLP-1 related companies, and it has not sued Hims. I think that's for a reason. Maybe because Hims is not doing something wrong. If they were doing something wrong, if they were still mass selling GLP-1s, they would not have declined quarter on quarter in revenues. So again, I don't believe Hims will get sued by NVO. I could be wrong, but I don't think it's going to happen. Now, in terms of guidance, they did reduce guidance a little bit. It was 2.2 to 2.4. Now it's 2.34 to 2.36. So they tightened it a little bit. Nothing crazy. Everything is still going very well. The company is eyeing an expansion into Brazil and Australia for 2026, and they also want to double down in the UK and Germany. So international expansion is a massive tailwind, a massive catalyst for 2026 for Hims and Hers stock. Something else that's coming up very, very soon in the end of 2025 2025 is lab testing. Lab testing is going to make Hims and Hers a game-changing subscription because it's going to make the subscription more sticky. Now, if you're on the Hims platform, let's say, for example, you're here for weight loss. You lost weight. You're not going to stay on the Hims weight loss subscription forever. You're going to cancel the subscription and move on. But if you have the at-home lab testing and you're consistently testing yourself to keep up with your health, you're highly likely to keep this subscription. So this is more of a non-cyclical subscription, you could say, and it will reduce the churn rate, and Hims will have much higher retention rates for those subscribers. And then if something needs to be addressed within the lab testing results, they can buy the products on the Hims and Hers platform, and Hims can also monetize the data, which is very valuable right now, into different avenues like other companies are doing. So this is, again, a game changer for the company, and it's coming at the end of 2025. The company right now has about, I believe, around 600,000 total in cash and cash equivalent. Long-term investments, they have 438. So all in all, they have access to about $1.1 billion in liquidity. The long-term investments are like government bonds and T-bills. In total, they have about $1.1 billion in available cash. And this is after the acquisitions they made. For them, and they do more acquisitions, they can buy back stock, they can pretty much do anything with it, which is pretty amazing. Now, I just showed you a company that's disrupting a $1 trillion TAM. They have 1.1 billion of cash, and this is a $10 billion company. So 10% of the market cap is pretty much in cash. They're growing revenues 50% plus, and the TAM is pretty much insane. They're profitable, and as they're growing rapidly. Now, what do you believe this company is trading at? Maybe 7 times sales, 8 times sales, 10 times sales, maybe 100 times sales like Palantir. It's not even close. This company is trading at 3.9 times sales, around 4 times sales. This is extremely, extremely cheap for the balance sheet of the company and for the potential growth and the TAM that the company is actually in. It's really, really cheap. And the reason why it's cheap is because, one, it's heavily reliant on GLP-1s and on weight loss products. And as I showed you, the company is diversifying away from that. The second reason is a potential lawsuit from NVO. But if they do sign a partnership with NVO, or if it's maybe a year or year and a half from now, where if NVO wanted to sue Hims, it would have already happened, Hims is highly likely to get a multiple expansion to at least 6 times sales, or 7 times sales, or maybe even 10 times sales. But 4 times sales for the growth, for the balance sheet, and the business model with around 80% gross margins is very, very cheap for a company like Hims. Now, whenever I'm valuing Hims, I like to look at their 2030 guidance of $6.5 billion in revenues. And in the earnings call, they gave us an update on this guidance, and they said our conviction remains high in our ability to meet or exceed the 2030 targets we established earlier this year. They believe they might be able to even exceed the $6.5 billion. And I think they can easily do it if they do a couple more acquisitions with the $1.1 billion of cash. They could easily do more than $6.5 billion. And the company has a history of beating that. But let's just take $6.5 billion at face value. The company right now is trading at 4 times sales. We're going to assume that 5 years from now, they trade at 5 times sales at the base case scenario and 10 times sales as the best case scenario. Okay? Now I'm going to take in the $6.5 billion. We time it by 5 times sales. This is $32.5 billion market cap. The current market cap is $10 billion. This is around 225% on the upside over the next 5 years with a company like Hims. Now I'm going to take the $6.5 billion and I'm going to time it by 10 times sales, which I would not be surprised at all once the NVO fears go away and all those things with GLP-1s. The company would be more like a software as a service for healthcare, you could say, more of a subscription essential company. And we could get 65 billion market cap. And if we divide that by the current market cap of only 10 billion, I'm getting around 550% on the upside over the next 4 to 5 years with a company like Hims with 1.1 billion of cash, 10% of the market cap, that's disrupting the healthcare industry. So to me, I see this as one of the best risk rewards in the market. Of course, the risk is high of a potential lawsuit or if something happens. But again, guys, if it wanted to happen, I think it would have happened already. And other companies got sued by Eli Lilly, and Eli Lilly is actually losing most of those judgments. So if Hims gets sued by Lilly or NVO, it doesn't mean that HIMS is going to zero. It doesn't mean that HIMS business model is obsolete. HIMS has been compounding for a while, and compounding in general has existed for, I think, 40 or 50 years. So they're not getting rid of it anytime soon. And it looks like NVO wants to embrace HIMS and hers and wants to embrace telehealth in general, and they want to partner up with the leader, which I believe would make a lot of sense, and hopefully it does happen. It would reduce the risk a lot. And that was my opinion on HIMS. It was not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.